Episode 174 of Futures Radio Show, sponsored by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com.
Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudele sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudele.
Hey everyone, before we get started today, I want to thank our sponsors. CME Group, Trading Technologies, RJO Futures, and Top Step Trader. Now today I spoke with Derek Haworth, CEO of Born Technology. Now today Derek and I discussed the voids in FinTech that his company, Born Technology, is filling. We chatted about how their software monitors bad market behaviors and explains what MiFID II is and how they are helping firms comply with these new regulations. Finally, we discussed the impacts that MiFID II will have on companies and traders. As usual, thank you all for listening, and please enjoy this episode. Derek, welcome to the show.
Thank you, Anthony.
Very excited to speak with you today, Derek. We have a lot to discuss. Something that we're going to talk about is called MiFID II. It's very hot in the media right now, so I'm going to pick your brain on that and several other topics that are important in the industry. But before we begin, you have such an interesting backstory. So let's start there, Derek. Tell us how you got your start in the industry.
Sure, would love to. My father, Buck Haworth, has been in the business for probably longer than he'd care to share. He was both a local and a broker at the CME. And naturally, being his son, I got involved pretty early on with him. So by the time I was probably 12 or 13, I was writing some code for him, some programs to help assist on the brokerage side of his business, doing such things like invoicing. And fairly soon after that, I began building trading models, both for himself and some of his colleagues as well. This is back quite a while ago. The tool that we were using was something called System Writer Plus that probably very few people know about or recognize these days, but it was the predecessor system to something something that's called TradeStation now. And then going forward, I continued to work with him. So throughout my high school and college years, I was both a runner and a clerk on the trading floor in the Eurodollar and S&Ps. So that's my initial introduction to the markets. When I went off to school, I wasn't really sure what to do. I thought I wanted to become an economist and quickly learned that wasn't the direction of the world for me. So I decided to pick up math and computer science. It just came fairly easy to me. I never really thought I would ever use it, but it was something that I could pass through. And so I ended up majoring both math and computer science. And after school, came back and worked with my father. I traded for a few years from an office and was modestly successful, but just didn't really have a passion for it. And through conversations with him and other people, I found that if you weren't really thinking, eating, sleeping, and breathing trading, that at least in those days when it was mostly position trading, if you weren't on the floor, then you probably weren't cut out of the business. So I left the industry for a couple of years. And when I came back to the industry, I was lucky enough to be introduced to one of the great men of the futures industry, a gentleman by the name of Fred Arditi. And Fred and I had a number of conversations, and he took a look at my background, and he suggested that I get involved in this new thing around called electronic trading. And I talked to him about it, and I talked through it, and it seemed to match my skill set. I had fairly substantial experience at that point. I'd already been involved in the markets in some capacity for 10 years, and I knew a heck of a lot about computers, so I thought I'd give it a try. And he introduced me to a gentleman named Larry Arnowitz, who was running the North American operations for G&I Incorporated. And G&I at that point in time was one of the very few groups that was providing electronic trading in the Eurex. In 1996, the CFTC issued a no-action letter allowing certain groups to offer what they call DTB terminals. DTB was the predecessor to Eurex, and G&I was involved in that, and in 1998, they froze that. So essentially, at that point in time, nobody else could offer Eurex terminals. So at G&I, we were in very, very early in the electronic side of the business. We serviced customers like the predecessor to Jump Trading, Getco, SAC Capital, many, many other groups that came on that became, obviously, as we all know, very, very big. So I became the CTO at G&I, and in 2002, we were purchased by Man Financial. And at that point in time, my father, who had come off the CME board of directors, he was looking for something else to do, and I thought that I would join together with him, and we opened Born Technology. And that is how I went from my initial days to opening Born with my father.
Derek, where do I begin? The people you named, especially Fred Arditi. Those of you listening, if you don't know who Fred Arditi is, just go and Google him and see what he and Leo Malamed did for our industry. If you're trading on a computer, you owe those guys a lot of gratitude. And I want to go back to your dad, Buck. I started in the pits in the mid-'90s. What pit was your dad in, and was he still actively in the pits in the mid-'90s?
He was definitely actively in the pits. He started out in the I believe in the yen in his very early days. So he was in the yen and the D-Mark for a while, and I believe it was 1981 he moved over to the euro dollars, and he was in the back month euros all the way through roughly about 99. He was on and off the floor in those latter years, spending 50 to 60 hours a week on the board of directors. But he was really there all the way through late 90s and early 2000s in the back month euros.
And the reason why I asked that question is because talk about being ahead of the curve. Your father obviously had a real vision for where the industry was going, and you were able to grasp that and be able to start programming in the 80s and early 90s is when you first started?
Yeah, exactly. In the late 80s and early 90s.
Yeah. Yeah, I mean, that's talk about being ahead of the curve, and then you get into computer science, and boom, here we are today. So Born Technology, that's why we're here today. I'm very interested in your company. You guys are a technology firm filling very important voids in the industry. Can you talk to us about what you guys are doing at Born Technology?
Sure. The aim of Born has always really been to take complex things and make them very simple for our customers. We're a technology company. We have been since the beginning, although originally we were organized as an introducing broker for payment streams. And when we started out, the focus was really on the co-location side of the business. You know, again, you mentioned the vision and Buck being there very early on. Well, when we first started the company in 2002, we went to a co-location facility on the south side of Chicago that nobody really knew about. It's a place called Equinix at 350 Cermak. And when we went in, I think they were about 15% full. And we were the first financial services company in Equinix outside of maybe SIAC or Safety might have been in there at the time. And as most people in the industry probably know, that facility has not only filled up over time and gone from 15% full to 100% full, but they've expanded multiple times over. And really outside of CME and Aurora, it is the dominant financial hub in Chicago. And when we started out providing the co-location out of Equinix, the aim was really to deliver a turnkey solution to customers, because really most traders, really all they want to do is they want to have their algos, they want to have their trading strategies, and they want to hand off the complexities to other people. So that's what we do, is we take the co-location, the servers, the market data, the DMA, and we make it very, very easy for our customers to roll out their trading strategies.
You mentioned simplifying things that are complex. And Derek, I'm a simple man, and a lot of these market behaviors are very complex. And, as a day trader watching market action for as long as I have, I can recognize sometimes when there is a bad behavior going on, when we look at spoofing or layering and things like that. And I think it's very important that these firms are using your technology to monitor traders to make sure that they're not conducting bad market behavior, because I think it's important for the institutions and the firms and the CTAs and the hedge funds just to do this within, instead of all of us relying on the regulators and the exchanges for identifying these types of bad behavior. So really glad that you're doing that and working with these firms, and glad to see that the firms are actively working with you to help prevent this. And now with MiFID II, it's something that I don't know how all these firms are adjusting to these new rules with MiFID II, but your technology also monitors for that. So talk to us a little bit about how your software does this.
The historical metric for trading groups and hedge funds, and even to a large degree many banks, has been, what's my P&L today? And above and beyond that, certainly they want to know the risk, but there hasn't always been great historical metrics on what's going on inside. And we started really on the technology side, monitoring things like system health and latency. But as we did good things for our customers, they wanted us to continue to roll out solutions. And diving deeper into what's happening within a particular prop group or hedge fund or even bank trading group, we want to give them more and more information about what their traders are doing and how they're trading. And as time has gone on, and particularly with MiFID II, what we're seeing is the regulators don't want to be the only ones watching for this type of market abuse. So they're actually forcing all the participants in there, all the banks and clearing firms, and even the trading groups, to roll out their own systems for watching market abuse. And that's where Born and some of our products come in, is we enable this. We enable all the banks and trading groups and hedge funds to, on a real-time basis, watch all their traders for various different types of market abuse and ensure market integrity that the regulators are looking for.
Yeah, when I was going through your site, one of the offerings that you have is something called Crosscheck. Can you explain to us what Crosscheck does?
Yeah, absolutely. Crosscheck at its heart is a surveillance and reporting platform for compliance with DEA, algo, and order flow monitoring. So essentially what we do is we watch global order flow on a real-time basis and apply it to multiple different types of monitors, about 100 to 200 different ones we have that various groups can select from, and apply all the order flow to these monitors on a real-time basis, and then alert into a workflow to check and see and report if there are any issues, and then the compliance teams can go through and assess whether or not there's a real problem there. And on top of that, we end up doing MiFID transaction and EMIR reporting as well, which thankfully are not required in the U.S. at this point.
One of the questions I have, because I think this is very important for all of us traders out there that want to be involved in the markets, that are involved in the markets, to make sure that we have this type of regulation that prevents these bad behaviors. Now that you're working with these firms, you have a real good sense of how good the regulators have gotten at identifying bad market behavior. How good have they gotten?
The regulators have certainly gotten quite a bit better. What they really want to see is they want to see a significant effort at compliance. And we all know we've been through this. We've we've seen the various different trading groups out there who, many of them had no intention of breaking any laws, and they've been fined, millions and more, along with criminal allegations and indictments. So I think generally speaking, people want to be rather compliant. People want to be very compliant. The regulators have gotten better, but as the regulators have gotten better, they're forcing everybody to get even better as well. The regulators and the exchanges don't want to see any of the downstream users, any of the clearing firms or trading groups, not identifying anything that they have already seen. So in a sense, the regulators are forcing everybody downstream to be even better than they are on an ongoing basis.
Let's talk about MiFID II. Now, according to the media and a lot of what I've been reading, January 3rd was the deadline. But you told me when I was speaking to you about MiFID II that January 3rd was just a soft deadline. So I'm a little confused at that. I want to have you explain that. But also, if you could, give us some details as to what MiFID II is. I think a lot of us know some details about it, but it is pretty big and complex. And like you said earlier, your software helps simplify things that are complex. So if you could just simplify the answer of what MiFID II is a little bit for us.
Certainly. So those are great questions. MiFID II started in about April of 2014 as a follow-on to an earlier regulation. And MiFID II essentially took what was an equities-only law and layered that over onto essentially all derivatives, almost all other traded products. And if you think about what Dodd-Frank is, Dodd-Frank was, at some degree, the model for MiFID II. They took Dodd-Frank and multiplied it by about 10 times, and that's what you end up with MiFID II. But when we think about the scope of the law that was ratified in 2014, at the end of 2017, they were still putting out interpretations and new regulations around it. So the ability for people to comply has been significantly hampered because really people haven't been sure what the interpretations are. They really don't know exactly what to comply with. So the regulators have essentially said that they will offer a degree of forbearance to all the investment firms, the quote investment firms out there who are the European registered trading firms. The regulators will offer them forbearance as long as you tell the regulators that you are not currently in a state of compliance and are able to demonstrate on an ongoing basis that you are making progress towards complying. So is January 3rd a soft deadline? It is, in the sense that if you are attempting to comply, they have stated that they won't come after you right away.
See, this is what drives traders and firms crazy, this type of regulation, because it's regulation on top of regulation. It's confusing. Earlier I said I'm a simple man. You help things that are complex and make them simple. This to me sounds very complicated. And I guess the question I have for you as someone who understands it because your company is helping firms comply with it, how complicated is this, and what are the direct impacts you see MiFID II having on the industry?
It's absolutely an extremely complicated law, and there are many, many different facets to it, depending upon the particular area of the business that you end up in. The overall impact of it is that costs have gone up quite dramatically, and as we all know, as they have across the industry in many different ways, but the cost on European investment firms gets ramped up dramatically through the various different things that they have to do, from transaction reporting on the MiFID II side to EMIR reporting to all the different surveillance tools and everything else that they have to have in place. So the overall intention of MiFID II, I believe, was to increase transparency in the markets and to provide, in essence, an audit trail if anything goes wrong. And while it may do that to some degree, it has certainly come at a significant cost.
For those out there that maybe still don't understand what MiFID II is, can you give us just a very basic example of a firm that pretty much everyone would know about in the industry and something that they're going to have to now change on how they operate on a day-to-day basis?
Certainly. So if you take a look at any prop trading group, it doesn't matter. Prop trading group has 5 guys, and they trade from an office in London. They now have to specifically register with the local authorities, with the FCA, as an investment firm. And in addition to conducting their business on whatever exchanges they do, they actually have to do reporting, 2 different types of reporting now. One up into an ARM, an approved regulatory mechanism, another set of reports, almost identical, into a trade repository. And this is, of course, the same trade data that if you're trading on ICE and trading on Eurex, this is the same data the exchanges have. So that reporting has to be done. In addition, they have to have real-time surveillance as well for all their trading, so not just risk monitoring and management, but they have to have internal tools, which, as we've discussed, is a good thing. Internal tools to make sure that there's no layering or spoofing or other market abuse occurring. And on top of that, we're still in the middle of assessing: are there minimum capital requirements? How does the trading apply to the capital requirements? Does it net out, or does it bulk up on the basis of the number of contracts a day? As we've talked about, we're still all learning what the real impact is, but we know so far that it's relatively significant.
So for the independent trader out there, is this going to have any impact on them?
If they are inside the EU, the independent professional trader would need to register as an investment firm. If they're not inside the EU, then in theory they would not need to.
So if you're an independent trader trading at home on your computer, you now have to register as an investment firm? There's certain bars and qualifications for that. I'm probably not the best qualified to answer that question since I'm not an attorney or a compliance officer. But my understanding is that there's a certain threshold which is relatively low. We're working with groups of traders that have 2 people that are required to register as investment firms. Gotcha. Well, it's just good to get some information on this. Obviously, everyone out there has to do their own due diligence, but I think one of the important things to know is that these changes are coming. They are here. And if you feel like you fit into this category as a trader, you better be doing your homework to find out more about this. Derek, great insight today, but we're not done yet. We have rapid fire questions if you're ready for those.
I'm ready.
All right, everyone, our rapid fire segment is sponsored by Trading Technologies. Trade the global markets from virtually anywhere with TT. They are the world's fastest commercially available futures trading platform. Create your account and try it now free at tryttnow.com. Derek, first question. Who has influenced your life the most and why?
We talked about him a bit before. That would, of course, be my father, Buck Haworth. When you talk about having vision, when you stand on the shoulders of giants, you can see a hell of a lot further. And for me, the expansion of vision that my father was able to give me has been extraordinary. Thank you, Buck.
How has Born technology evolved over the years?
We've certainly added on many, many more products so that we're no longer just a co-location company. We've expanded out into the software realm to help all the different trading groups administer, risk manage, and comply with the overall industry regulations. But when you take a look at it, when we first started in 2002, trades were measured in milliseconds. You now measure your trades in nanoseconds. That is 1 million times more granular resolution than we saw just 15 years ago. So the changes in the advance in the industry are remarkable even from that sense.
What's the number one resource you spend your time on?
The number one resource that I spend my time on is definitely Google, searching everything.
What's your favorite book about trading or the markets?
Reminiscence of a Stock Operator is definitely my favorite, although I do really enjoy the market psychology books by Van Tharp.
What's your favorite movie or TV show about trading or the markets?
Trading Places.
What's the best piece of advice you've received about the markets?
This probably applies to Bitcoin mania. And that is, the party always has to end sometime.
Now, if you could give a piece of advice to the new people interested in getting involved in FinTech, what would it be?
My advice for the people getting involved in FinTech is look around, look to see what the next big thing is that will have an impact, and continue to look over time at what the changes might be. Don't get involved too deeply in any one thing, that you keep your head down and don't look at the constant changes happening around you.
If you weren't involved with FinTech, you'd be doing what?
Well, if I couldn't make my way as a bourbon distiller, then I'd definitely have a brew pub.
Derek, this was great today. I could talk to you all day about the history of markets. It was great to have you on the show today. Really gave us insight into things that are not necessarily things that traders really think about on a day-to-day basis, but they impact us, and you gave us great insight into the world that we really need to be focused on. So thank you so much for coming on the show. Can you tell people where they could find you on social media and give us a website to check out?
Yeah, absolutely. The best way to look at us is on our website at borntech.com, BORNTEC.com.
All right, everybody, make sure you check out Derek's website at borntech.com. Derek, thank you so much again for coming on Futures Radio Show.
Great. Thank you, Anthony. I appreciate it.
Thank you for listening to Futures Radio Show. If you have any questions or comments for myself or my guests, please visit futuresradioshow.com and sign up to be a premium member for free. If you enjoyed the show, don't forget to leave us a review on iTunes.